Citi overshadows again. Today, it's Bank of America. Let's talk to Reuters correspondent Ernie Scheider. Yesterday, Citi stole the thunder of Goldman. Today, they're stealing it from Bank of America. Yes, exactly. All right, just very quickly before we get to Citi, B of A posting a slight profit, better than the loss that was expected, but the gains are way below a year ago, and they took a $1.6 billion hit on litigation charges there.
Never mind that.
Never mind that. Let's move on to Citi. Okay, investors are kind of happy today because the shares of Citi are going up 2%. Michael O'Neill, the chairman, flexing some muscle.
Part of the reason Citi's shares are up is because of the new aggressive role that the chairman and the broad board of directors at Citi took, basically in removing Pandit and replacing him. And so, sources told Reuters that on Monday night the board met, the chairman and then CEO Pandit basically were at odds, and that's what sort of led to Pandit's exit. And so basically, the question I'm asking is, does this move sort of herald in or usher a new era of aggressive boards out there right now? So for so long in corporate America, chairman and CEO roles have been combined. Slowly, some companies, like Citi, are splitting them, but now we're seeing a more increasing independent, aggressive board with Citi. Could this spread to other companies?
Okay, so what about new CEO Michael Corbat? Clearly the board thinks that he's going to look at things on a granular level, the way they didn't feel that Pandit was doing.
Right, so let's not forget, they sent him to Europe to run the business there, did a good job, and now bringing him back as CEO of the broader company shows that the board has the confidence that he can really get into those details. They had criticized Pandit for just basically being a mile high, and not really looking at, and let's not forget a board's job is really to do that, to look at the broad picture and to hire someone to look at those granular details. So with this new CEO hire, Citi clearly feels that they've got their Mr. Fix-It to make the bank, really, really strong, especially as we come out of these economic doldrums. You really want to have your A game as the economic situation improves.
Right, good point. Okay, regarding Pandit's exit, Reuters reporting that likely no golden parachute, no pension, and fairly worthless options. Now, the stock that he does have, as of today, worth $21.5 million, but 2/3 of those carry restrictions.
Right. I mean, it's not what you would think of as a stereotypical exit package. We're not talking hundreds of $millions here. His options, some of them are valued around $244 a share. So Citi's stock is right around 30, is give or take. Is not going to hit 240 probably for a very long time.
Yeah.
So he'll be holding those options for a while.
That's our new game that we can play, though. What's in Pandit's pocket?
All right, we start a video game.
He got that $800 million for the hedge fund.
That's true. He did sell his hedge fund to Citi earlier this decade for, as you say, around $800 million. So he's not in the poorhouse.
Not in the poorhouse. Housing, good news there.
Very positive news.
It's back.
Yes.
It's back. More signs. New home building. Right now, the numbers indicate September building on the fastest pace in more than 4 years. August numbers revised up as well.
Yep. What I was thinking as soon as I saw these headlines was, okay, Ben Bernanke's got to be dancing in the aisles at the Federal Reserve. This, in some ways, is a positive indicator of what he was trying to do with QE2 and QE3. So let's not forget, why do people buy houses or decide to build houses? Because they can get credit. And when interest rates are so low, that makes credit easier to get. And, he's trying not to overcompensate on the other end, but clearly if I'm interested in buying a house and interest rates are so low right now, that's sort of encouraging me to do so. So, it just sort of corroborates what his logic was on QE3.
Good news for shares of home building companies. As we look across the board, green arrows here. Look at Hove, over 9%.
I mean, KB Homes, 8%. I mean, let's not forget these stocks, nobody would touch them 3-4 years ago, and they've really had a tough, even 5 years since before 2008. So this is really positive news for investors in these companies.
Okay, let's move on to the broader markets. Looking at U.S. stocks here. We've got S&P and NASDAQ up, but the Dow weighing on it today, IBM and Intel, which we'll talk about in a minute.
Yeah, I mean, definitely, positive news all around, but not good for Intel.
Okay. To the hot spot,
let's check it
my
out.
friend. And let's go back to the future, shall we? Dutch company ASML, now they basically make the machines that make the computer chips, correct? So they are going to buy U.S. company called Cymer, $2.5 billion. That's really going to put them on the cutting edge for chip making.
Yes, I mean, obviously chips crucially important space, especially as we get into more and more mobile devices. And so that's kind of the new area for chips. How can you get chips that'll work in small devices, like the rumored iPad mini that might be coming out later this month. So, we're gone beyond the days of kind of big, behemoth, relatively speaking, chips. And so how do we get back into the microarchitecture, fewer moving parts, less energy, less heat, and this clearly is a space that they want to be in.
Okay, good news for shares of Cymer, up 55%. Huge boost there.
Not a small jump.
Not a small jump. Okay. Now let's go back to the past, shall we?
Sure.
And the aforementioned Intel,
Yes.
because bleak outlook for fourth quarter,
Yep.
the limping state of the PC, margins squeezed, and they are down 3% today.
Yes, and a bunch of analysts cut their price targets today. So when you contrast this, with the exciting news, that we were talking about with Intel, let's not forget tech likes what's new, what's interesting, what's coming.
Right.
Intel was that company. The challenge that it has to address is, okay, how do they sort of get back that magic that they had in the 80s and 90s, sort of in the heyday of the personal computer. So very few people buy PCs nowadays. I don't know, got Christmas and the holidays coming up. People are talking about buying iPads or Kindles or the other cool new smaller devices. And not many people are out there buying desktops, which is Intel's bread and butter.
This Ultrabook laptop of
Yes.
theirs, which already has taken some flack.
Yes.
Yeah.
Exactly. So, the challenge for Intel will be, okay, how do we replicate the magic from the 80s and 90s to work in the devices of tomorrow? And they haven't answered that question for Wall Street yet.
They haven't. Okay, finally, moving on to the for-profit education sector. Apollo Group owns the University of Phoenix and others. They're going to cut a bunch of jobs, about 800 of them, shut down 25 campuses. Weak forecast for the rest of 2013, slashing budgets hugely for 2014, and shares are plummeting down 18.5% today.
What I thought of when I first saw these headlines was, okay, this should actually be the heyday, because online learning has never been more popular than it is today.
Right.
But the for-profit side of the equation has come under increasing scrutiny, especially as the Department of Education and even the Department of Defense, with returning soldiers from the Iraq and Afghanistan wars, go back to school.
Right.
So my own brother just got back from Afghanistan. He was in the Marines. He loves using the GI Bill, but he decided to go to a brick and mortar school. That's trouble for Apollo and other for-profit educators out there right now. And so the company's also come under scrutiny from the SEC in the past.
Sure.
So there's just a lot of concern out there. Okay, what is the core mission of the school? Is it to educate students, or is it to remunerate their stockholders? And they don't have to be mutually exclusive, but some on the street think they are lately.
Yeah, so if we look at the for-profit education sector kind of across the board here, how this is affecting their shares, not a green arrow in sight.
Yeah, obviously Apollo is the 800-pound gorilla in this space, so it drags down the whole sector. Even Washington Post Company, which owns Kaplan, very, very lucrative for-profit education unit, but not doing well today either.
Okay. Thank you very much, Ernie Scheider.
Sure thing.
Nice to see you. And remember, follow us on Twitter at Reuters Insider. Check out our YouTube channel. That's Reuters.com/ReutersTV. I'm Lisa Bernhardt. This is Reuters.